Welcome to The Explainer. Today, we're digging into the hidden chain reaction that can bring the global economy to its knees, all starting with a single military flashpoint.
Okay, so let's just jump right in with a massive question. How can just one regional conflict instantly bring a fifth of the world's entire energy supply to a grinding halt? The answer, it turns out, reveals the incredibly fragile interconnected system we all depend on.
So where does it all begin?
Well, it all kicks off with a single spark in one of the most critical and vulnerable waterways on the entire planet. I want you to picture this. The date is February 28, 2026, and a military conflict suddenly erupts in the Strait of Hormuz. Now, this narrow channel isn't just some random body of water, it's the main artery for about 20% of all the oil and gas that's traded globally. So what happens when that vital artery gets clamped shut? Well, the first domino to fall might not be what you think.
Before the navies can mobilize or governments can even fully react, the very first shockwave is financial. It comes from the global insurance market, and it creates an immediate, invisible blockade.
To really get this, we need to talk about a very specific financial tool. It's called war risk insurance. This is not your standard car insurance policy. This is highly specialized coverage that protects these massive ships and their billion-dollar cargoes from things like military strikes, terrorism, or, piracy. The bottom line is, without it, most companies simply will not risk their assets.
And that's exactly where the crisis truly begins. Within days, the powerful London insurance market, which, by the way, underwrites a huge portion of global shipping, makes its move. They either cancel coverage for the whole region flat out, or they jack up their prices to absolutely astronomical levels. The physical strait might still be open technically, but the financial gateway has just been slammed shut.
And the scale of this reaction is just wild. We're not talking about a small price bump here. Premiums for this kind of insurance surged by 5 times. That's a 500% jump almost overnight.
So what does that actually mean for a single ship trying to make a single voyage? It means hundreds of thousands of dollars in new, totally unexpected costs. For a lot of them, that just makes the journey financially impossible. It basically achieves what a physical blockade would, but with paperwork instead of warships.
And look, this wasn't just one or two companies being cautious. We're talking about the big guns. You see players from Norway, the UK, the US, even India, all at the same time, pulling their war risk coverage. What this does is it creates a consensus. This area is now uninsurable, and that means it's unnavigable for commercial trade.
So the money side of things is in chaos. What happens next? Well, that financial decision quickly triggers actual physical chaos out on the high seas.
This is what kicks off what we can call the Great Rerouting. The shipping lines have no choice, right? They suspend all new bookings to the Persian Gulf, and they order ships that are already in the area to just stop. The risk is simply way too high without insurance.
And the immediate result? It's a traffic jam of epic proportions. You've got more than 150 vessels. We're talking oil tankers, gas carriers, giant container ships, all forced to drop anchor, completely stranded in the waters around the Gulf, just waiting for a safe path forward that might not come. And this right here perfectly illustrates the price tag of that chaos. The cost to ship a standard container from Shanghai to Dubai's Jebel Ali port, which is a key hub for the region, more than doubles. It jumps from about $1,800 to $3,700, seemingly in the blink of an eye. This disruption has a very clear, very immediate price.
Okay, so here's the really crucial part. How does all this mess at sea actually end up affecting all of us? This third ripple is the global price shock, and trust me, it hits everything from the fuel in your car to the food on your table.
First, the most obvious impact, energy. With 20% of the supply choked off, the price of Brent crude oil just shoots up, going from around $62 a barrel to over $80. And that doesn't just affect gas prices. It raises the cost of making and transporting pretty much every product you can imagine.
And this is fascinating. Based on UNCT data from a similar real-world crisis, a disruption like this can cause a 3.7% increase in what you pay for food. But here's the kicker. Look at this breakdown. Almost half of that price hike has nothing to do with the actual cost of the food itself. It's purely from the higher cost of just shipping it to you. That's the hidden tax of a fragile supply chain.
Now, you might be thinking this is just pure, unmanaged chaos, but believe it or not, there's a system in place. There are legal and contractual shock absorbers that are built into global shipping for exactly these scenarios.
See, the whole industry runs on standardized contracts that are designed to anticipate these kinds of risks. And at the heart of all this is an organization called BIMCO, the world's largest shipping association. They literally write the rule book that everybody, from ship owners to cargo owners, has to follow when things go sideways.
And that rulebook is constantly evolving, it's learning. The old 2013 version was kind of vague. It often led to long court battles just to decide what danger actually meant. But the new 2025 version, it's much smarter. It gives the ship's captain clear authority to avoid a risky area, getting rid of that ambiguity. It's a system learning from past crises to get more resilient.
So, when you pull back and look at this whole chain reaction, what does it all tell us? The key takeaway is just how fast and how far the ripples from a single event can spread across the globe.
Let's just recap those 4 key steps we've walked through. First, a regional conflict ignites. That immediately triggers a financial reaction from insurance markets. That in turn leads to a physical reaction, as ships halt or reroute. And finally, the economic impact lands on consumers everywhere through higher prices for essentials like fuel and food.
And all of that leaves us with a really critical question to think about. We've built this global economy that is incredibly efficient and interconnected. But as we've just seen, that very interconnectedness is also a huge vulnerability. So, are our supply chains truly strong enough to handle the next inevitable shock?
Thanks so much for watching this explainer. If you want to keep understanding the complex forces that are shaping our world, make sure to subscribe. And hey, we really want to hear from you in the comments. What topics should we break down next?